All righty. Good evening, everyone. Welcome to the Hurley Investments Financial Commentary for Tuesday, November 13th. I can't believe how this year is just flying by. That's the short answer. I have a lot that I want to go over tonight, but please feel free to ask questions at any time. I know I have not been around for the last couple of weeks, I guess last week. So for those of you that missed me last week, I'm going to start off with a little bit about what I've been doing and why. I changed about 3 weeks ago my chart patterns. As you look at my chart patterns, I have them a little bit different. My chart patterns are now using, and I'm going to get a highlighter, I am now using pivots. The reason why I'm using pivots is because it shows me a numerous amount of, hold on, I see someone saying no chat. We have a chat session, Abraham. Are you able to hear me okay? I missed last week's chat, but I'm here for this week. Abraham, you should be able, perfect. Okay. So really quickly, or just a little heads up, I have gone to pivots. And Abraham, it'll probably catch up to you because everyone else, I think, everyone else can see my screen okay. Let's make sure everyone can see the screen okay. Everyone can see that screen okay. Abraham, maybe give it a quick second because I got two people telling me the screen is okay and that they can see it. It might be getting across to Brazil. So hopefully the image will come across for you here in the near future. Okay. So here we go. I went to pivots. I'm looking at pivots in my charting. And the reason why really comes down to volatility. With the way the volatility's been, I want to see on a day like today, hey, is the pivot point at 25, 396 going to hold? Is it going to go down and test the, all right, let's take a look. Where are we at right now? It closed today at 25, 298, 286. So the next point down could be the 23,841. It seems like we finished just below a pivot point today, created a doji. I am using pivots in conjunction with the Williams percent R to give me the best idea of where the market might go short term. So because of that, I'm trying to do the best that I can to make sure I'm on board with the quicker movements of our market. I'll be honest with you, and I'm going to go ahead and ask the group. If anyone's been watching the markets on a daily basis, has it just been ridiculous? A couple of you are going, well, it can be bad. It is kind of ridiculous. So I've went to the pivot points to give me a closer term month by month or current month understanding of just where we could go. I started using these about 3.5, 4 weeks ago because we sometimes get caught in between the 50-day and the 200-day simple moving average. So I want to know if there's a level in between there that we can see a bounce from. I want to use the Williams percent art where I can start to see a bounce. And really this comes down to taking off or on long puts. I'm going to move this out. It's a little bit different because I wanted to go through this a little bit later, but Apple and adjusting trades. I'm pretty sure I took one extra picture here of Apple. This is Apple's movement today. And I still have 225, 220, 217 and a half, and 215, November 23rd and November 30th long puts in place. In all honesty, when I saw today, drop lower, came up, drop lower and test the bottom. What would you call that chart where you've got the two little points right there? What would you have called that chart in regards to I don't know. It's technically, what would you call it? Double bottom. There you go. I'm sorry. I kind of struggled through that. So I really, really struggled today with saying, you know what? 192, I'm going to take some puts off. And then it got to 193. And I said, you know what? I've got so much money. I can add another 100 shares pretty easily. I'm going to take those puts off. And I'm sat there watching it, and it went up, and I said, I should have taken those puts off, and came back down, said, here's my time, but I want to wait. I want to typically wait for the first hour, which was right about here. And then it took off, and I got all ticked off, and I said, should have taken those puts off. Should have just been done with them. Could have been done with them. Oh, I can't tell you the frustration level that I had with those stupid puts. I'm taking them off for a profit. I've done okay with Apple. And then I watched all the jaggedness and watched it come down. I thought, boy, sure glad I didn't take them off. I wish I would have taken them off. So glad I hadn't taken them off. Here's my lows where I can take them off. Not comfortable. I'll keep them on for one more day. And then the extended hours were up $1.22. It has been difficult. It is extremely hard, if not impossible, if not impossible, to confirm trends in a headline risk market. Now I collar trade, and I'm kind of going about this differently, but today I chose to keep my long puts on for one more day. By this time, Apple has $100 billion. They are still able to, for all intents and purposes, they are still able and have the ability to buy back $30 billion of shares. They have done that in the past. But to adjust in a day trading fashion, to adjust guessing a bottom is absolutely ridiculous. It's not the smartest way to trade. And I'll be the first one to tell you this year, if I was to look at this year, what a ridiculous market we have been in. Out of curiosity, I call or trade. Why do I call or trade? Rich, I'll answer that question in a quick second here. Why would I call or trade, guys? Protection, risk reward probabilities. I call or trade because I'll admit to myself, I can't guess it right all the time. The question just came in, why am I looking at pivot points? I'm looking at pivot points to see short-term levels of resistance and support. I'm looking at pivot points to judge how far a stock can fall in between a 50-day or a 200-day simple moving average. I'm looking at pivot points to give me a suggestion in the short-term markets that we live in. If I'm going to pull some long put protection off now, possibly the short calls, looking for a short-term bounce. Our markets are gyrating to the point where, I'll be honest with you, I was shocked to see a VIX that wasn't at like a 20%. If I brought up a VIX chart, the way the market moved, I'm shocked today. Let's see if it still came out the way I think it did. I thought the VIX was negative today. Look at how our VIX is down. It closed at 20, but down 0.43. Yes, it's on that oversold on the Williams percent R. But really, I took a peek at our VIX. The low today was 25,193. 25,193. So the short answer is we were down 100 points almost more than the 100 that we were down today. Our high side, 125,551. We were 170 points higher than where we finished today. These are some pretty big moves. If I take a look, we were only down 4 points. We closed at 2722, but our low was 8 points lower than where we closed. Our high, 32 points higher than where we closed. I'm a little shocked to see our VIX tell me we had lower volatility than what we've had here recently. If you take a peek at pivot points on the S&P right here, gives you a little idea on why I'm a little worried. take a look at where our downside risk is right now, since we've busted below the 200, 2563. 2563. Taking a quick peek, 2563 minus the 2722. We have 159 points to a probable drop on the S&P 500. Well, Kevin, what about support? Yeah, we've got some really short-term support. Very short-term support. Nothing that justifies that we'll stop there on our way down this time. Whereas, look how close we had an intraday stop 2 weeks ago. I'm using the pivot points to give me a more accurate understanding of where our markets can go in the short term, in a 30-day period. Well, Kevin, you can use the VIX. I could use the VIX. I'll be honest with you. The VIX tells me in round numbers that I could lose 20% of the S&P value in the next 30 days. I get it. Yes, I could use the VIX. But I'm choosing to use pivot points in conjunction with the Williams percent R to give me a shorter term understanding of where we might trade and why. In saying that, the reason why I'm doing this is because of the way I trade. I'm can't type, using the Williams percent R in conjunction with pivot points for a short-term 30-day-ish, right? Understanding of where our stocks can go. Not saying that they're going to, but just having a little better understanding in the short term of what to expect and when I might take a little bit of a risk of taking off 30-day-ish on when I might take off long puts, short calls within my collar trade. Also, on leap long calls, when and where to add short calls to start to lower my cost basis. And that's basically on Bank of America, Visa, Facebook. So really quickly before I move on, any questions on pivot points? Volume side down can be seen as the market's participants deciding not to get more nervous than usual, since the lookout will continue like that, so the market plays accordingly. Yeah, I mean, in all honesty, volume was more than slightly down a couple days ago, to be honest with you. It was a little, for all intents and purposes, it was a little unnerving to see such low volume in our market. Kind of ridiculous. but I'm just trying to get a better feel for what's happening. So let me ask you, let me get back up to where I really wanted to go to start this off. Let's talk about ETFs a little bit. What type of investing are ETFs? What type of investing is an ETF? Passive. Someone's listening to me earlier, I think. ETF is a passive investment, right? Sit in it more than a year for long-term capital gains, Schedule K, or ownership returns, depending on the ETF, right? So it's a passive play on the stock market. Nothing wrong with it. It's just a passive play in the stock market. The stock market goes down 10%, like it has here most recently. What would you expect your ETF to do? If the stock market was to go down 10% like it happened recently, what do you expect your ETF to do? Uh-oh, Maud says the same. That is what you would expect. Markets go down 10% and most ETF funds, that's mutual funds, I should say that, asset allocation models have been down 12 to 15% because they rarely beat the S&P 500. Option traders, futures traders, currency. Future traders are commodities, so I'm kind of putting that out. Have been down in the 20% to 33% range from the people I talk to. There's one key point of an ETF. What does the ETFs do to our market? What is this passive type of trading? What does it do to our markets? Abraham says it adds to liquidity. Maud says it adds to complacency. Peter, it takes away liquidity. And I'm going to choose to agree with Peter. When they just sit and they're already kind of used up, the buys are already in, the sells are already in, I'm going to tell you, I would say that it takes away from liquidity. I don't see more liquidity with funds. I don't see more opportunity for investments with funds. It hurts the liquidity because they're already taken. The positions are taken, the positions are used, and there's a smaller amount of shares that are available. You don't have active trading. This is passive. And when you're moving through an ETF, you don't have a market maker to fix or to rotate shares in and out on an ETF like you do on a fund. It's a purely sit and hold. It's not, hey, we've been in it for a while, let's take X amount of shares out. It's passive. And I heard two things interesting on CNBC today. The lack of liquidity based on ETFs is really hurting or exasperating the moves in our stock market on a short-term basis. Really exasperating it. Rating the moves on a short-term basis. So it's interesting because as they talked about liquidity and what it's doing, we then had Larry Kudlow, and he came on to point a couple things out. Obviously, he's in the president's cabinet. So Larry said, hey, we are the best in the world right now when it comes to a strong economy. We have negotiated with Canada, Mexico, soon to be Japan, ongoing good European trade discussions, and starting to talk again with China, which in talking is usually pretty good. It also means, in a general sense, we've accomplished a lot, and we are still working on accomplishing more. And I thought about it, because I'll be honest with you, I thought, well, I didn't realize Europe was going so good. I thought we were doing pretty bad when it comes to our talks with China. What did Larry Kudlow miss here that wasn't on the first 5 or 10 minutes of his talk? What did he miss here? And a comment was just made. In fact, two of you just said that. One said Kudlow is a cheerleader. Not sure how true anything is. Remember, Kudlow is a CNBC analyst. I would understand both of those comments, but I'd also make the comment that I've always known him to be pro-capitalism. In all the years that I've listened to him, I've always seen him as more of a straight shooter. So I know it's there. I know that risk is there, but I will I will think he will be a little bit different. Tariffs. As of yet, are still not fully in place nor affecting the U.S. companies yet. And I thought, wait a second. That's not true. We've got tariffs that are going there. We've got against, 250 billion. Yet he was right. You know what? Tariffs are not in place yet. The big ones. It's been a little bit, and that might be the reason why at a G20 event we're going to have trade talks with China, because the big ones are coming, right? And if the big ones are coming, maybe that's what might save our Christmas rally. Maybe that's going to be the move that makes us look at things a little bit different. Which also means a lot of what we might be seeing here are worries that aren't coming across the bottom lines of companies just yet, which could start for the first time. I could see a possible run into the beginning of next year. I couldn't see it before. I wouldn't have thought it would be there. But I think I can see I think I see a little bit of light at the end of the tunnel. And it'll be interesting to see. Now, someone else just typed in, and I'm sure her eyes are rolled back in her head. Yes, but last time Trump negated all of his comments. I agree, he did. And please don't think that I'm saying there's no more headline risk. Because guess what? The new normal is a crapload of headline risk. But I also see some opportunity. And this is something that I haven't seen for maybe quite a while. I've kind of been some doom and gloom. And it's probably helped us throughout the year to be doom and gloomy, so to speak. But I do think I see a little bit of light at the end of the tunnel. With that said, obviously our markets are all still bearish. I've lowered my outlook, but I still think we'll have a positive November, which is really hard to look at when you see the S&P sitting slightly below where we started the month. Still wouldn't be surprised to see a little bit more. I would expect that would come with a Christmas rally. Earnings, Home Depot got beat up pretty bad, but survived the day okay. Macy's, Costco, and Nettie's tomorrow. Dillard's, Walmart, Nordstrom's, and Nvidia on Thursday. A couple bellwethers, maybe in Walmart and Nordstrom's. Economic reports, everything that's coming will be on Thursday. Retail sales, business inventories, Empire and Philly, some of our manufacturing areas. Friday, industrial production, capacity utilization, options expiration. Our monthly options expiration is coming up. Internationally, nothing much to pay attention to. Obviously, retail sales in China, industrial production may be looked at, may position our futures. I am still looking at earnings, and I'm looking at where I'm going to take up or down to take profits on long puts. And to move them to at the money prices for most equity positions. Unless I go all in, so to speak. I may still go all in. I haven't yet decided. I had an interesting article about homeowners are poised to tap 14.4 trillion in equity. More importantly, I have an interesting Goldman Sachs bear market risk indicator that says returns, the stock market, growth, global growth, U.S. growth is going to be nothing over the next 12 months. Do you think it'll be nothing, or do you think it'll be negative? You think the growth will be nothing, or do you think it'll be negative? Probably negative. Two of you typed in negative at the same time. I would think negative as well. And in thinking negative, my expectation on my collar trades, where I've been doing a lot of protective puts except for new money, my expectation is I need to look at my collar trades more under the light of, hey, it's time to add that short call back on. That short call has saved me in new money that was put into Apple here recently. That short call has helped with Baidu. Now, those short calls on Baidu are way back up at 300 way back when, but it's nice to take $5.60 out of 720 on a short call. I would suggest you read through this Goldman Sachs article. I'll post it on myhurleyinvestment.com. This would be a good one to review. As I went through, and I went through most of the forecasts and expectations, I agree. I think we're going to have some horrible GDP growth next year. I found it interesting. I usually do not watch Cramer. I usually do not follow Cramer. I found his comments rather interesting in regards to what Apple might need to do to see its stock start to reverse. I found him interesting, but I don't think he hit the point. Number one, he said, was Apple. A recovery of stock on Apple led to declines. But he thinks their ecosystem and their pricing structure is going to help a recovery on Apple. If the FANG stocks in general, herd mentality, can help the price of Apple. If the Fed slows down its rates, it'll help Apple. If China gets its act together with Cramer, with the United States, get some trading going on, get a trade agreement in place, it will help Apple. A weaker dollar will help Apple. Flight to quality in the U.S. will help Apple. And obviously, the drop of other companies could also help Apple. In all honesty, a lot of these also are directly related to a market reversal, not just an Apple stock. But don't forget that we will have Apple and could be another $30 billion of stock buyback. And then last but not least, a little look on oil. I will tell you, I would have thought oil prices would have been higher. It's obviously not happening this year. So watch out, right? But a very interesting article on what's happening with the oil. I'll be honest with you. I would hope to see at $40 a barrel. We have oil prices back down at the 165 price for 165 $1.65 cents per gallon for those of us that are buying oil. In fact, it's kind of funny because, right, I'm ecstatic to not go stick $100 of oil of gas in my truck. Cheaper oil means cheaper gas. With that said, though, it bothers me when I'm trading positions in the stock market. Cheaper oil means Chevron, ExxonMobil are going to be crushed. Cheaper oil means that the airlines like Southwest Airlines has hedged their oil at a much higher price, and instead of using their oil hedges or their warrants for the purchase of oil, their futures for the purchase of oil, they now have to use cash on hand. Doesn't make sense to use those futures. Doesn't make sense to use those warrants. That's not going to be helpful for those airlines to use what they thought would be savings or perceived savings that turn out not to be savings, right? If you listen to Southwest's most recent earnings report, you're going to look at a company that probably hedged oil in that $75 to $80 a barrel range, which means they're toast. Not going to be there. They have spent money on protection that maybe they didn't need. And not only that, if I remember their earnings, they said they probably hedged 80% of their purchases through 2019. That's a pretty good payment on fuel that they're not going to need. So just thinking out loud on how things are acting and expectations that you can plan on for the airlines. A lot of these airlines that talked about hedging their risk into oil and the price of gas have overpaid for protection they didn't need. Questions for the group. I kind of went a little bit long today, just thinking out loud. What questions do you have that I can answer for you that I may have missed? I know sometimes at Abraham, you've got some questions I sometimes miss. What questions do you guys have that I could answer for you? Or try to answer for you? Leave it to Peter. So, Kevin, when are you going to take off your hedges? I don't know. I would like to do them relatively quickly. I would like to look at the opportunity to cash in on my long puts. I haven't felt comfortable. I might not do them to November 23rd until November 30th. I don't know. I don't have an answer that I can give you on when I'm going to make my choices yet. With that said, we had another question that just came in that I also think is, I don't want to say it's funny because that's not what I'm going to say, but it's interesting. Red Hat, are you going to add a long put since IBM is the buyout? So why or when would I add some protection on Red Hat? Because Kevin, it should be trading at 190. That's the buyout price of next year, 190. So yes, I'd like to add some short calls here, but to buy out the first half of next year, starting in as early as January, there's some meat on the bones for Red Hat. Why haven't I had protection? Why haven't I bought more shares possibly? Well, I do have two people that are in Red Hat. Two people are probably saying, Kevin, go ahead and buy some protection for me. I'll take it. Give me the protection, right? With that said, though, the moment I hear any news that a Goldman Sachs or the Merrill Lynch might be fearful of something is when I will add protection on Red Hat. Well, Kevin, are you taking a chance that the deal could fall apart? Of course I am. But I don't want to overprotect something that right now everything looks copacetic, except for the fact that it's not trading closer to 190 like it should. That shows there is or could be some risk in IBM, in Red Hat. But right now, everything looks to be okay. When the chatter starts just a smidget, I'll throw some long put protection on Red Hat in a heartbeat for the expectation that maybe the deal is going to fall through. You need to decide to exit puts with some criteria, but you need to have the same decision set for reentry. And that way you might trade a bit more, but won't miss big opportunities. I'm not sure I believe that fully. So the short answer is, as Abraham's talking to me, yes. I'm not a short-term day trader. I'm not even a spread trader. I'm a caller trader. And it's been a little bit difficult to make these decisions on when I'm going to have my criteria, knowing for all intents and purposes, I'm doing 1 to 2 to 3 day swing trades. When I start to take stuff off, as it bounces between pivot points and then feel like I need to add it back on. I would really prefer an all clear signal. What are some of the all clear signals I'd be looking for? A China confirmation. Hey, we're going to get stuff done with China. A trend for a Christmas rally. Some economic reports that justify some growth and some movement towards Christmas at the end of the year here that I'm just not seeing right now. So yes, the short answer is, to a certain degree, I'm running into a little bit of an unknown territory for me. And with that said, I got to make sure that I don't make a mistake. That's what it comes down to. I can't afford to make a mistake with my money or my clientele's money. Hence, that's why I'm a caller trader. I'm not a swing trader. So hopefully I've gotten those two answered. Any other questions that I can answer for you? If not, I'm going to thank you all for being here. I look forward to talking to you next week. And after next week, I will be off and then I'll see you, I'm sure, the next week after that as well. But are there any other questions? If there aren't, I'm going to wish everyone a good night. I appreciate you having here. Fun to talk to you guys again. I apologize for last week. I just could not make things work. I will have this off tonight, so hopefully it'll be posted most likely tomorrow morning. You should see it at myhurleyinvestment.com, and obviously we will go from there. You guys have a wonderful evening. Appreciate you being here, and I'll look forward to talking to you next week. Bye-bye, everyone.